Well, happy Monday, everybody. My day started off awesome. Although the market was down when I took off to go skiing this morning, got up there on a bluebird day. It was 1 degree. 1 degree. It's amazing though, when it's dry. It's perfectly comfortable if you bundled up. Anyway, it was a lot of fun. Hope you had a great day yourself. Welcome to our market insights. Talk about what's going on in the market. Kind of nice to see that market recovered during the day. Makes life a little better for a whole lot of people, I'm sure, including some of you. So it is January the 13th. Quick reminder that what we do here is for educational purposes only, not considered as investment advice. So, what's moving the markets? Well, we're kind of waiting on the latest inflation data. So, we've got PPI inflation at the wholesale level coming out tomorrow, CPI inflation at the retail level coming out on Wednesday. So, I suspect inflation is going to come in a little hot. Um, I think inflation has proven to be stickier than the Fed originally anticipated. The forecasts of all of these rate cuts we are going to be getting this year, they're not happening. I'm just flat telling you. So we're going to need earnings to drive the market. And in a few days, we're going to start getting hot and heavy into earnings season, and then that'll really start to kick off next week. Money's been moving out of big tech recently. Do I think that's good strategy? No. I mean, is it reasonable to have a little bit of a pullback when you've seen the kind of run up that we have? Sure. Big tech going anywhere? No. Is that still where all the money's going to be made? The vast majority of it. It's where all the growth is, right? You think AI is going anyplace? That's just starting. Last week saw a blowout on the jobs report. Another indication that the economy is healthier than was anticipated. Another indication that a rate cut is really unlikely. 10-year Treasury, and that's the problem with this anticipation of what's the Fed's going to do or not do, and a strong economy and a strong jobs report. 10-year Treasury is creeping up. It wasn't that long ago. We're at 3.6. Now we're getting close to 5%. The market's not going to like it if we cross that threshold. And I think big part of that is going to have to do with these numbers that come out this week. And then next week, we have the next Fed announcement. And I think they're probably going to be more hawkish than they have been. And oil prices been moving up, up, up. I guess there's some supply issues in China, among other places. We're scratching $80 a barrel. So everything I know about oil, I've learned from watching Landman. Any of you watch that on Amazon Prime? Oh man, that show is unbelievable. You have to be able to handle some romantic scenes. That's the polite term. If that's not your thing, I don't blame you. Don't watch the show because it's definitely in there. But I've learned really a lot about the oil business. I've always followed oil prices. I follow that daily, just as a matter of what I do as an investor and a teacher. So, what to watch this week? So we have the Business Optimism Index. That'll be coming out. That'll be interesting. Producer Price Index and the core PPI. Again, that's inflation at the wholesale level. Then we got some Fed speak. And then on Wednesday, we got the Consumer Price Index. We're anticipating prices went up 0.3% month over month and 2.9% year over year. The last report was 2.7. So inflation is going up. With inflation going up, the Fed can't be cutting rates. And then we'll see how we do with, you know, core CPI. So there's a lot on the line there. Thursday, we get initial jobless claims. It was 201,000. I mean, way low. We're expecting it to come in at 210. We'll see. Retail sales will be announced. I mean, if that's a big number, again, inflationary, import price index, another measure of inflation. And then we get some housing start information on Friday, but a pretty busy news week, I will tell you that. Last week's heat map, check this out. NVIDIA down 7.78%, Oracle down 7.46%, Palantir, big pullback on the stuff that is more speculative, like a Palantir. We have seen a definite reversal and some significant profit taking. Now, on the other hand, for the last week, energy, those stocks have been going up. Healthcare has done well. And then our old buddy Walmart and Costco hanging in there. Now, the 1 year heat map, much more telling. I mean, there's a ton to have been made. Walmart up 70%, Tesla 72, Amazon 42, Alphabet 33, Meta 64, Broadcom 108, NVIDIA 145. So it was pretty broad-based opportunity out there if you're a decent stock picker. And if you apply to options to these, then your potential return went through the roof. Market sentiment is interesting. The level of bullishness is below historical averages. Right now we're at 34.7, historical averages are 37.5, and bearishness is above historical averages. Normally 31% of those polled are bearish for the upcoming 6 months. Now we're at 37.4, and the data simply doesn't support that. But we'll see. How much the Fed's going to cut? Boy, has this changed. Now we are not forecasting a Fed cut probably until the summertime. That'll probably be the next time that we're going to see a Fed cut. Pardon me. The next announcement is January 29th. There's a 98% probability we get no rate cut. I'm telling you, it's 100% probability that we get no rate cut. 1 year sector return. So the market's been up 22% for the last year. That's the S&P 500. And the big winners have been communications, technology, discretionary, and financials. Slightly underperforming industrials and utilities. And then far underperforming is everything else. Down at the bottom, real estate investment trusts, healthcare, and materials. Take a look at the charts. So we had a bit of a comeback today, as you will see. So here's the SPX. That is the S&P 500. See where we sit in relationship to that 50-day moving average. Yeah, we've been below now. 1, 2, 3, 4 days. I tell people, if it's a week or more, start paying attention. So we have definitely lost our momentum. And if we get big inflation numbers, we could lose some more momentum. So this is definitely something to follow. And then on the Qs, we've also gone below our 50-day moving average, which is this yellow line. At least with the Qs, the yellow line continues to slope upward. On the SPX, that yellow line, oh, it's pretty flat. Been moving up for most of the last 6 months, but yeah, it's pretty flat at this point. So definitely change. And you can see down here, look what the MACD did. It turned red right back here. And since then, we've kind of been drifting down. If you're looking for a light at the end of the tunnel, this is how we made out on the day. So we started down here, 57.78, finished up at 58.36. And you can see we flirted again with the lows, but then we climbed throughout. So good sign. And I will tell you, futures, at least as of right now, are up as well. All right. I will be back with you, of course, next week. So until then, have a splendid week. Hope you're off to a fantastic start for the new year. And we'll be seeing you soon. Bye for now.